Hey everyone, it's Hunter Satterfield, partner and CPA and advisor here at Kane Waters and Associates. As always, I am joined by one of my fellow partners, Brian Bortz, who is also the head of our Kane Waters Investment Committee, and then also Brad Sanders from Tectonic Advisors. He's the managing director there, and this is your April market update. For the month of April, the S&P 500 or domestic stocks was up right around 5.3%. Global stocks were up at 4.3%. Domestic bonds up 0.8%, and then global bonds up right around 1.3%. So it's definitely an up month. And gentlemen, as I come to you guys with some questions about what's going on, it's interesting because obviously we've had some crazy months so far just in the first 4 months here this year with some ups and some downs. I know we've got some inflation concerns and that type of thing. Brian, I want to start with you first, or Brad, I want to start with you first, excuse me. Just sort of speaking to what's going on with the sort of big moves up and down over the first 4 months this year, and inflation concerns and all that type of thing.
Yeah, I think that what you just said, inflation concerns are kind of at the root of what's driving the market. You know, we've got a very different marketplace, the new leadership in the market. Most of the stocks that are leading right now are asset heavy, which is what you would expect when you have inflation. You know, you would want hard assets and not cash. And you know, companies that are real asset light, like tech, are not doing as well. So it's a complete flip from the last couple of years. And I think those inflation expectations are at the root of that. Now, we are, on record, and we talk, in our presentations every week about inflation and kind of our thoughts and how we expect to get some mild inflation, but not necessarily right now. But the market's dragging all that forward and anticipating that. And so I think, given that and the trajectory of the market, the market, like you said, was up over 5% last month. It's up tremendously already this year. I think we should just brace ourselves for some volatility at some point over the summer. It would be really healthy for the market to take a little bit of a breather here, to back and fill a little bit, and to kind of settle down. When markets go straight up or straight down, it's never very healthy. So you want some of that. And I've heard Brian say lately, it's going to be a bumpy ride up. I think you could expect that over the summer to have some volatility. We should embrace that, though. We shouldn't be worried about it.
Yeah, I think that's helpful info, and kind of what we're communicating with clients is that we still have a healthy sort of underlying economy, and especially if we're thinking long term with our investment approach with dollars that we're thinking long term on, to really go ahead and get that stuff invested and get it working for you. If those are long term dollars, because it will be bumpy, it will be volatile, stay diversified, I think are the key sort of ideas there. Brian, coming over to you a little bit, since our last update in March, we've had some rumors that match a lot of the pre-election discussions around Biden and his tax plan. And so those have come out, here over the last few weeks about potential increased capital gains rates and ordinary income rates and these types of things. And we've been getting a lot of questions from clients about sort of just the fear and uncertainty that comes with that, and what the potential implications are on the market. I know you can't exactly predict what's going to happen with the actual legislation, but with the assumption that we're going to see rising tax rates here upcoming, what things do we look at in the market itself?
Yeah, thanks, Hunter. The thing I can say, regardless of your political affiliation, because it really doesn't matter either way, both the current president and the previous president have both said they were going to do something, and they're going to do it. President Biden has said we're going to change the tax rules, and he's going to change the tax rules. And because he said it so early in the campaign, the market already basically priced that in my opinion. And I think that there's not going to be a shock to the system when and if that ever gets passed. The rules are going to be such that if you make taxable income over $400,000, that your tax, not dramatically, but some. The top tax bracket currently is 37%. The top tax bracket will be proposed to be 39.6, which he famously said was the same tax rate that we had when President Bush was president. He said that for a reason. And, you know, the thing that people aren't paying attention to is that right now you don't hit the top tax bracket until you make over $630,000. And so that's going to be squeezed down. So more people are going to get affected by higher taxes. That being said, how it affects the market is that if you have taxable income greater than $1 million in a year, then that could affect your ability to even qualify for capital gains rates. Currently, the capital gains tax is 20%. Biden has proposed that he may increase that into as high as 28%. I believe that the joint negotiations and the bipartisan agreement will be somewhere closer to 25% capital gains tax. We'll see. But rest assured that this will probably happen end of summer, early fall, depends on how much negotiations have to take place. But, you know, I think the thing I want the clients to take away from this is that the market's already prepared for it. And you're not going to see some, you know, you shouldn't see some incredibly large tumble for any reason just because a new tax bill gets passed.
Yeah, that's great. I think we saw a little bit of that at the end of the year when there were some obviously pre-election rumors around a lot of that, as far as, oh, Biden, if he wins, is going to increase tax rates, and the market's going to crash. And it didn't actually end up happening. And in fact, like we've showed on these monthly updates, these first few months, some of them have been very strong. And so I think that the things that, like we've talked about on before, the things that affect the market most are shocks and surprises. And so I think that's great to hear from you, Brian, as a CPA, and then also, you know, the head of our investment committee. So thank you, gentlemen, so much. Thanks for tuning in. We will be back in front of you all with our May monthly update in about 30 days. Thank you so much.